Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making the move, and what to expect for the future. Today is September the 13th, 2023. It is now 10:28 a.m. Central Time, a little bit earlier in the day. I have some meetings later on, and I wanted to get this report out to you for a couple of reasons. Number one, I haven't put a report out for a couple of days because I have been in meetings that were all day long and didn't have an opportunity to get out and get these reports out early enough. And number two, because today was the release of the Consumer Price Index report that covers the month of August. And as you know, if you watch the show often, the Consumer Price Index report is number 3 on the big reports that we look at. We look at what happens with the federal funds rate from the Federal Reserve. We look at the personal consumption expenditures report because that is the favorite measure of inflation according to the Federal Reserve. And behind that is a Consumer Price Index report, which came out today. Now, the Consumer Price Index report in general is probably actually looked at a little bit more than the personal consumption expenditures report, which will come out at the end of the month. But the Fed seems to like the PCE more than the CPI when they make their decisions. Now, the Fed is going to meet next week and talk about what they're going to do with the federal funds rate. We'll start talking about that more in the coming days. But let's talk about the Consumer Price Index report. Now, I'm going to take a minute here and again explain what the Consumer Price Index report is. And then also we'll take a look and see how this has reflected in our charts and then, of course, in our interest rates and our movements for the day. And we'll see where we are right now after a couple of days that we haven't reported as to where home loan interest rates are with the Brent Bruce Daily. So the Consumer Price Index report. So understand that the government, and in this case, the Bureau of Labor Statistics is who is monitoring this, needs to understand what is going on with the cost of things in our country. So what they do is they take what they call a basket of goods. Okay, so picture your grocery cart, or in the South, they call it your buggy. So you put into this your milk, your eggs, your butter, your oil, and you fill this thing up with the things that you need all the time. You know you're going to need this. This is very consistent. And each month, you put the exact items, 1 thing of hot sauce, 1 gallon of milk. You put all of these items into your buggy or grocery cart, and you check it out and you look at how much it costs. Now, again, these are the exact same items. And you find that from the month of June to July, for some reason, it's 1% more expensive. But you bought the exact same items. Well, that is because of inflation. And understand that you might say, well, 1%, why is that a big deal? Well, what is 1% times 12 months? That would be 12. So that would mean that if that was a consistent rate of inflation over a year, you would have your products 12% more expensive from January 1st of one year to January 1st of the next year. That is a tremendous amount of inflation. And we were pretty darn close to those type of inflationary numbers here about a year ago. Okay, so things have come down. So understanding that. Now, when I say this basket of goods, what is this basket of goods? Is it groceries? We just talked about eggs and bananas and milk and all that kind of stuff. No, it's much broader than that. And check this out. You can follow along and you can see exactly what is going on and you can read this information very easily. Okay, so first of all, if you go in here and you type in CPI, just type in CPI into your Google browser, whatever, it's going to pull this up here. And you're going to be sent to the first link at the top of the page is going to be for the U.S. Bureau of Labor Statistics. Now, this is who actually puts this report out. This is directly from the horse's mouth. Now, you can start by going to CNBC or MSNBC or somewhere like that. And they're basically going to have, like you can see right here, August core inflation, excluding food and energy, rose 0.3%, hotter than expected. Okay, so when this report came out, it's big news in the business world. So they put out the information. Now, here's the thing. They're getting all of their information. If you click on this article here and you read this article, they are getting all of this data, every one of these numbers from this right here. So from the U.S. Bureau of Labor Statistics, if you look down here, it's going to talk about the report that just came out. CPI for all items rose 0.6% in August. Gasoline and shelter are up. If you go right here to where it says PDF and you click on this item, it is going to bring up the actual report. All right. So it's not that big. You can look over here. It's not short, but it gives you a lot of information. And in here, you're going to see, for instance, here, The consumer price index for all urban consumers rose 0.6% in August, a seasonally adjusted after basic, okay, 0.2%. Okay, so what this is telling you is 0.6%. Now, when you think about a number like 0.6, it seems like a very small number. But again, do the math times 12. That is going to be a 7.2% increase in your basket of goods over the next year. That is too high. We don't want inflation to be that high. It needs to be closer to a 2% annual increase. Now, inflation is healthy. You're supposed to have inflation all the time in the general economy. Otherwise, you could have stagflation where things sit too much or even drop, and that can be a problem as well. It seems like a good idea if prices go down, but not so much if you really look further into it. So understand that we want inflation to be at about 2% per year. Okay. So this report says that it came in at 0.6. Well, that is hotter than what we want it to be. But this is based on what's called the headline reading. So this is based on all of the items that are in this basket of goods that we talked about. And we're going to look at what is in that basket here in just a minute, like specific items you're going to be able to see. But understand that when you talk about the headline number, it includes food and energy. Now, food and energy are the two kind of X factors that we have to understand and pay attention to. Food and energy are very volatile. Okay, like when you say energy, translate that to the word gasoline. Okay, so we know that we have to look at the cost of gasoline almost on a daily basis. If we want to know where to go buy gas at, which station or whatever the case may be, we're looking all the time. Oh, it's up 10 cents over there. It's up 4 cents over there. It moves all the time. The same kind of thing happens a lot when it comes to food. So food is very volatile as well. So because of that, when the Federal Reserve starts to look at what is going on with the general economy and basic inflation, they like to remove food and energy and focus on everything else. That is called the core consumer price index. It's the core reading. There's a core consumer price index. There's a core personal consumption expenditures. There's different things. And why they do this again is because they want to say, okay, kick out those volatile items and what's going on with the rest of the economy. So let's take a look and see exactly again what that looks like. We're going to get to our charts and interest rates here in just a minute, but I haven't really talked about what this is for a while. So once again, go in and pull up this document and you're going to know as much as CNBC knows. You're going to know as much as MSNBC knows. You're going to know as much as Kramer knows, because guess where he gets his information? Right there. Exactly where that comes from. So if you look in here a little bit further, you can read into what all of this is about. But let's scroll down here and let's take a look, because they list the general items that they're tracking. They actually break down this basket of goods. So what is in this basket is pretty interesting. So look at, you got the general item like food, and then food at home. It then starts to really break it down a little further. Cereals, baked products, meats, dairy. Okay, so like in this page here, it says meats. Well, if you scroll down further, you're going to start to see where it talks about, okay, when you say meats, what do you mean? Beef, pork, ham, other, frankfurters, lunch meats, poultry, chicken. You see, it breaks these things down quite a bit. Let's scroll a little bit further down. Okay, we're not going to just say how much were vegetables. We want to know how much were bananas, potatoes, lettuce. They track these items, guys. So let's look a little bit further down. Snacks, spices, olives. I mean, they're getting deep. Go a little further down. Now we're talking about energy. All right. Energy is broken down. Gasoline, motor fuel, electricity, utilities, gas. Go a little further down. Now they get into some really strange things. Window coverings, laundry equipment, dishes, tools, prescription drugs, recreational activities, pet food. What else here? I think there's some really interesting things a little bit further down. Oh, yeah, here you go. Did you know that they track alcoholic beverages and tobacco, beer, ale, tobacco, cigarettes, personal care, shaving cream? I mean, it's amazing what is all in here. Dental services. So this is something, I bring this up because it's right there for you. Type in CPI. It's going to come up, the Bureau of Labor Statistics report. Click on the PDF document, and you can find out exactly what is going on if you so desire to do so. All right. So just understand, one of the reasons you probably watch this channel is because you say, hey, that's cool and all, but I don't care about reading all that kind of stuff. Just tell me what's going on. And we're going to get there right now. Overall, the CPI came in hotter than expected. The headline number was hotter than expected, and the core number was hotter than expected slightly. We were hoping for a 0.2 reading, 0.2%. It came in at 0.3, a little bit hotter. We still kind of point the finger at housing because, again, core does not exclude housing, and housing lags. What that means is that the cost of housing is stabilizing. We don't see stuff going up right now. We see it stabilizing, but because it was going up, it's kind of lagging and bringing in this lasting effect, this hangover of the cost of housing going up so dramatically. So that's continuing to make even our core reading a little bit higher than expected. So that is a little bit hotter than we wanted it to be, which means that home loan interest rates in the bond market in general should not be happy, right? Because that is inflationary and we do not want to see that happening. However, the market was smart enough to look further into it and does see that housing is a very large, disproportionate amount of why this report went up. So we are right now down 1 basis point. Again, this is now 10:39 a.m., a little bit earlier in the day, but we're down 1 basis points on our mortgage-backed security. Our 10-year treasury, we're up 1 basis point at 4.28. Again, this is much higher than we would like to see. Here's a quiz for you. If you watch this show often, if the 10-year treasury is at 4.28, where do you think in a normal environment home loan interest rates would be on a 30-year fix? There is a correct question for that, or at least a general a range. So respond to this and tell me what you think that where we should be. Now let's take a look and see where we are. First of all, taking a look at the charts here, we seem to be kind of hovering around this 25-day moving average, kind of bouncing back and forth in there. Here's a floor of support under us, ceiling of resistance above us. We're going to have to see what happens tomorrow with our personal consumption expenditures report. And remember that next week, we're going to hear from the Federal Reserve on what they're going to do with the federal funds rate. Are they going to increase it? Are they going to leave it alone? We'll talk more about that later on. Let's take a look and see where home loan interest rates really are right now. So we always talk about this is where home loan interest rates really are, okay? As a mortgage broker, I am showing you my pricing that I am taking a look at every single day. Let's pull up this scenario, the Brent Bruce Daily, the very well qualified 30-year fixed conventional primary residence, 800 FICO score, and take a look and see where we are right now. These are the real rates, guys. This is exactly what I would be quoting to a client here. My revenue is already built in. Okay, so this is not revenue on top. Okay, so 7.375% with a credit back to the client of $1,001. If you open this up here, let's take a look and see what happens if maybe you want to buy a point. Here at 0.8, so just under 1 point is 6.875. So we can get to 6.875 if you want to pay a point. If you want to get down to that wonderful 5 handle in the, I'll go 6.0. We'll act like that's 5.999. It's going to cost 3.8 points. Okay, a little bit expensive for that right now. Let's make sure that we always take a look at United Wholesale Mortgage because they are the largest mortgage lender in the United States of America. And right now, 7.375 is costing $904. Again, 6.999 is going to cost just under 1%. So it is a little bit cheaper to go with the loan store as of today. And if you want to get down to this 5.875, a little bit expensive. 6.0% is at 3.74. Just about the same, okay, as what the loan store was offering today. So we're not seeing quite a bit of a benefit for buying interest rates down as of this moment. Take a look at the parameters here for compliance purposes. This is the real deal, guys. There's not something I add on top or anything like that. These are my real numbers. If it seems awful low, that's because we are cheaper than mortgage bankers, period. End of story. So if you want to give me a call and I can talk to you or I can talk to your clients to get these kind of rates, let me know. If you have any questions, comments, let me know what you think about where home loan interest rates should be right now based on the 10-year treasury. Make sure that you like, subscribe, share. We went a little bit long today, but hopefully you learned a little bit about the Consumer Price Index. I'll talk to you again soon.